for them. So good evening, everyone. I am Vaibhavi Kulkarni. I'm a faculty member at the Communications area at IMA. Thank you for joining us today evening for this research seminar. So today's seminar is going to be by Professor Neharika Vohra. She's going to discuss with her work examining women serving at the board level in the Indian corporate sector. While the representation of women in top roles, leadership roles has been on the rise, it is a very, very slow process. And representation is only one half of the story, right? Because along with representation, we need inclusion. And Dr. Vohra's work touches upon both data pertaining to representation of women at the board level in the Indian corporate sector, and also what this data tells us about women's experiences, about inclusion levels, about maybe the role that they play vis-a-vis their male counterparts. Now, Dr. Neharika Vohra is a professor at IMA in the Organizational Behaviour Area. She's a trained psychologist and she's been associated with the OB area for 25 years now. And she has supervised over a dozen doctoral scholars. Her work's been published in leading research journals internationally, and she also serves on the editorial board of many of these top journals. So over to you, Dr. Vohra, to discuss your work.
Thank you. Thank you. All right, so I'm really, thank you very much for spending an hour, wanting to spend an hour listening to this research that took me more than a year to put together. This is a little different kind of research. This research does not have a very fancy theoretical background. It's not testing hypotheses, but it is really looking at the data that we have from the whole phenomena of having a mandate that got put in by the MCA and SEBI, saying that there had to be at least one woman on board. If you have a clarificatory question to, just raise a hand or something so that I can address it. And also, if you do have another kind of a question, more like a discussion, put it in the chat, and then we will also spend some time just having a conversation around this research. All right, so what I'm going to do is I'm going to share my screen, and that is what we will use to talk about my research. Give me 1 minute. Yeah, so any such research which requires us to look at a huge amount of data, in fact has a number of people who have helped. I've just put a few people who have helped at different levels in the in this research project, starting from data analysis, sending out surveys, thinking about drawing the graphs and so on and so forth. So there's been a lot of work that it involved. Let me quickly get into the context of the research and then also the research itself. Yes, and also just to say that the research actually started by a request from the FICCI, who ran at the beginning of the mandate a mentoring program for women on boards. And they were very keen to see not only whether the mentoring program had done well, but also what the numbers look like in terms of the post the mandate. Let me just, this particular slide is not possibly very optimistic, but it's useful to see what the context of India and women in India is. So in fact, the number of women who get educated and join the workforce in India is about is less than 25%. Out of 100 CEOs and managing directors of companies, the number of women who reach the top is only 3. So it's really depressing. Until 2014, that is the mandate came into effect, the number of women on boards was 401. Yeah? Some had served already on the board for 22 years or 25 years, but there were only 400 women who were on boards. India is actually 108th, yeah, among 149 countries in terms of gender gap, and 142 among 149 countries in terms of gender economic participation and opportunity gap. Very, very depressing numbers. And India is one of the few, actually possibly the only country where there is a drop in participation of women in the workforce. In 2019, about 23.4% of women were in the labor force across the country, which is down from 35% in 1990. And it's a really, it's a puzzle that we possibly need to solve as to why there are so few, why the number of women participation is going down. So it is a matter of concern that women are sparsely represented among Indian corporates, because conversations and studies around the world show that presence of women in the workplace actually adds about 47.7% more to productivity. And even if women do not bring anything special to the workforce, I would still say it's a waste of resources to have educated women drop out of the paid workforce for whatever reason. So that's the really the macro context. But let me also give the context of this study, of this particular study. I think the story of having fewer women in the corporate space and the workforce is quite prevalent across the world. In early 2003, several countries released mandates on minimum number of women on boards on corporations. And Norway led the way, and Europe set the standard. The argument being that unless it was mandatory, it would be difficult to break the status quo. And also the whole idea was that if women were there at the top, they would make it visible, and they would start to serve as role models. So the whole idea was, what do these mandates do? Because when the mandates got introduced, a number of people started saying, well, companies will bring in family members, companies will bring in non-qualified women, the companies will bring in dummy directors. So it's interesting for us to see, rather than work on these myths and assumptions, what really is happening. And that's really the purpose of the study. And what we did was, so first we thought, let's look at whether the mandate itself is meaningful, whether we should look at the mandate or not. And what we found was that, and this is a fairly busy slide, but good for us to spend a few minutes looking at it. The countries in green, Indonesia, China, Russia, Brazil, Mexico, Saudi Arabia, and South Korea, are countries that have no mandate. Yeah, countries that are in orange on the screen, that is Australia, United Kingdom, Canada, United States, Turkey, and Japan. They don't have a mandate, but they said disclosure is required. You have to tell us how many women you have on the board. And the countries in blue, Spain, France, Italy, Netherlands, India, Germany, Switzerland, are the ones that actually had a mandate. And it's obvious that the countries that have a mandate have higher number of women on boards. India was a late entrant. India was also is the only developing country to actually have a mandate. But the interesting thing also is that this growth of number of women on boards is definitely has grown as the mandate has been put in place. And also, in most cases, the countries have met the mandate that was put in place. So, for example, France said in 2010 that we will have 40% women. Today, they have 42.2% women who are part of boards. Or, for example, Italy said it would be 30%. So, from 2008, 3.6%, they have actually gone to 31.1%. So what we're saying is that when we start to look at it, when we say you have to report it, it's a mandate, then the number of women increases. Even monitoring increases representation of women. And of course, if there is no mandate, then there is no increase in women, or the increase is really small. So this is just what we saw in 10 years in G20 countries. There are other countries who put in a mandate, but they were not part of the G20. And just because I didn't want the slide to be really too overcrowded, picked a certain number and looked at them. So I guess many of you know that in the Companies Act of 2013, Section 149 said that companies of a certain stature, and what the stature is already there, who have paid up equity capital share not exceeding 10 crores and net worth not exceeding 25 crores, those are the only companies that don't need to. But anyone that is listed will have to have one woman director on its board by April 1st, 2015. In May 2018, SEBI mandated that the top 500 companies to appoint at least one woman director by 1st April 2019. The mandates in India gave rise to speculations, of course, as I already said, we don't have enough women, we're going to put in all kinds of women in the thing. And there was a lot of discussion and possibly not so positive things that was said about whether we should have or should not have a mandate. So this study that was taken up was to understand the impact of mandates broadly. The study was designed to analyze the state of implementation of regulatory mandates about women on board of directors in India's public firms. So we were only going to look at listed, the NSE listed firms. We wanted to look at the profile, compensation patterns, the recruitment, participation of women board directors in India's public firms. And we also wanted to understand the experiences, expectations, and challenges of women board directors in public firms. So these were some of the things that we wanted to do. And for that, what we did was we looked at both secondary and primary data. Secondary data, no guesses. We use the PRIME database and the NCA website to actually look at 1,944 NSE listed companies, and we made comparisons with men directors wherever it was relevant, and we analyzed all kinds of demographic data on that, and I'm going to present all of it. But we didn't just want to stop at looking at secondary data, so we also sent out surveys to independent women directors listed in companies, and we basically wanted to have them respond to us on issues such as, how were they appointed, what were the reasons why they joined boards, what were their expectations, had their expectations been met, what kind of challenges did they face, and what were some of the, and did they think that they needed to be part of a women women on board committee or a community in that sense. We got 192 women directors responding, which might seem like a really small number, but in fact, if you were to look at any other data that is published on women on boards or on members on boards, if they're using primary data, they have very small sample sizes because the return rate of mostly the directors is very poor. So we got about 10% people responding back to us, which isn't really great, but this is what we have. All right, so now I'm going to get into describing to you what has happened post-mandate. So what did our data reveal to us? So we found that 73% of the companies that are listed in NSE, so we had data for 1,788 companies in this case, and we found that 73% have one woman, right? And if you look at the number of companies that have one male director, it's 4. So there are 4 companies that have one male director. There are 1,311 companies that have one female director. There are only 14 companies which have more than 3 women directors, and there are 1,623 companies which have more than 3 men directors. So yes, we have met the mandate. but still the most common number of women on boards in Indian boards is 1 for women, and the most common number for men on boards on Indian boards is 3. Yeah? And that's something for us to look at. The average number of women on boards is 1.03. And there are only 5 companies among the 1944 studies, companies that are listed, which actually have more than 5 women on their boards. And you can see these 5 companies, I've named them. And on the date that we stopped collecting data, which was sometime in January 2020, there were still 18 companies which did not have a woman director. Yeah, so there were 18 companies that had flouted the rule, the mandate, and there are only 5 companies that actually have more than 5 directors as women, right? And 2 of them are Godrej companies. So one of the things that becomes evidently clear to us is that the moment you have only 1 woman director, you are either making them hyper visible or you're making them invisible in that entire thing. And we will talk about this a little more as we go along. Because there is research in the gender at the workplace, which very clearly shows that you need a critical number of people in a group to actually have their voice heard. And 1 is not a critical number for anyone to get their voice heard. Also, not surprisingly, only 0.7% of the independent women directors actually occupy chairperson roles. So again, there are very, very few companies that have not only have a woman director, but the woman director actually is the chairperson of the board. That number is 0.7%. Let's look at type of directorship positions held by women on boards. One of the things people had said that when the mandate would come into effect, in fact, people would just put family members as board members. That myth is not true. In fact, our research shows that the number of independent and non-independent women and men directors is pretty much equal. The number is more skewed towards independent directors among women, and it is more skewed towards non-independent directors among men. So the data is right there for you to see. So there are 58% women who are independent directors, and there are 53% men who are actually non-independent directors. And if you put all the data together, then it's a 49-51 split. Is that? So I think there is, that's an interesting bit. The other thing that we found that was interesting is among the women directors who are family members, like the women who are actually members of the family, 16 of them have subsequently been asked to become members of boards of unrelated companies, not in their own family, but they're actually 16 of them have become members of independent, they have become independent directors in other companies, which is a healthy trend, I think, because the talent and the experience of these women is being noticed beyond the fact that they are part of the family. So that's that we thought was interesting. However, the data becomes a little more not so rosy when we start to look at positions held by non-independent women on boards. Among the 928 non-independent directorship positions held by women, only 106 non-independent women directors are in fact professionals. So these are women who are on the board because they hold executive positions. So there's CTO, CHRO, CFO kind of positions, and that number is only 106 of them, which is less than 10% of the total number of directors, which means that in fact women are not coming up the pipeline. So the number of women who are actually occupying boards because of their seniority in the organization, that's a very minuscule number. And of course, one other way to look at this whole myth of that, unqualified women will be actually made part of the boards is another way to see is that among the family promoter directors, roughly half of them, right, about 241 of them, in fact, you have functional responsibilities, and these are women. Right, so 241 women actually hold functional responsibilities, which means that they are not there just to attend the every quarter meeting, but they're actually also doing something in the company. So that's an interesting one for us to look at. Now, what is interesting also is to look at how the mandate has, the behavior of the companies around the mandate. Very predictably, again, one is not surprised that on April 1st, 2015 was when the mandate had to come on effect, and 2015 was when we saw a peak in the number of women who got appointed. So right around the date that the mandate had to come into effect, there was a scramble to have more women appointed. And once they were appointed, you can see that the number of women who were next time appointed, so when the men retired or somebody retired, in fact, that many women were not appointed. There's actually a dip in the number of women who got appointed. So if you're looking at the chart, you know where I'm pointing out. So this is where the mandate was, and the next year itself, the actual number of women who got appointed was much lower. It's not like they were sent out, but the new appointments, these are all the number of new appointments per year. Okay. Again, as I had already mentioned, SEBI had said to the NSE 500 companies that by April 1st, 2019, you would have to put one independent woman director. And so again, there is a soar in 63 in February, 42 in March, and 63 again on 1st April 2019. So again, there is, so our companies don't seem to be very well planned. They know the mandate is going to come into effect. They don't really do it, organically. Just around the date of mandate, there is a rush and the scramble, and a lot of women get appointed. So that's not very nice for corporate governance, if one were to think of it. We also looked at, there is this whole concept of the same woman getting appointed on boards. And we found again that, we wanted to see whether, how many women are actually on multiple boards. And if they are on multiple boards, which kind of multiple boards are they appointed on? So are they appointed on related companies? So the same family, same group of friends, same group of companies. And also, when were they appointed when was their second appointment on? So let's say I got appointed in January 2014. Then if my next appointment is in February 2014, then I have a 1 month lapse between the multiple appointments. But if I got appointed in, let's say my next board appointment was in January 2016, then I have almost 2 years of lapse. And our assumption is that if there is a greater lapse between somebody being appointed on multiple boards, then that woman is being appointed because either she has built a reputation for being a good board member, or at least she has gained experience of being on that board, and then she's being appointed on another board. And if she's being appointed right after she's being appointed to one board, then it's maybe just to fill the mandate. And we found that 40% of the women directors received second appointments within 6 months of the first one, right? So 60% of course got it much later, but 40% got it within 6 months, which is a really short time. And in fact, 15% actually got it within 1 month. So there is a certain level of evidence of skirting the mandate, that is very sure. So I find a woman, I get her on one board, and then either my friend or somebody else also gets says, she's let me also put her on a board in that sense. So that's one other thing that happened. So we also looked at whether where were these multiple appointments on. Whether they were in related companies or they were in unique companies. And to figure out whether they were on related companies, we would go into the websites of these companies and figure out who the promoters were, whether they were the same family, same location. And we did a fair amount of sleuth work to be able to figure that out. And we found again that a third of the women who were hired in less than 1 month were actually family members. So of the 15% who got hired within a month, a third of them were family members. So again, more evidence, deeper evidence of skirting the issue and the mandate, or just getting around and having more women. In other cases, the percentage of family members hired to multiple boards was actually less than 16%. So, I would say only a fifth of the women were actually, less than a fifth of the women who were family members were on multiple boards. However, we also found that whenever there was a quick appointment, which is 1 month, less than 1 month, even among the independent women board members, very often that appointment was to a related company, right? So it was either a partner company or a related company, and we have some data on how this was. So we looked at about us, leadership team of the website, and if there were common names, then we found. And we didn't have the bandwidth to actually record it, but in most cases, there is also a fair amount of regional language and caste affiliations as well. So, the Guptas get into Gupta-led firms, and the Sindhis get into Sindhi-led firms, and the Parsis get into Parsi-led firms. So there is a lot of that as well. But we actually did not, I don't have data to show that. But that is how some of our impressions were as we looked at the data. So one of the things that, so let me move on, and one of the things is, where do you get your women directors from? In most of the research, they show that if you use formal hiring places, then you are likely to get a diverse set of women or a diverse set of directors. But what we found was that in most cases, women were hired from professional networks. That is, I knew this person and I'm part of this professional network and I get it. Family is the second largest source from where I get a woman director. Professional search firms are actually fairly low, and also people who've attended training mentoring programs are hardly ever looked at. So again, Vicky was quite disappointed with this fact, but the fact is that people are not looking at trained, people are not looking at formal search firms to search for directors. They're in fact looking at their own personal networks, personal professional networks to find them. So that's another interesting thing. Also, not surprisingly again, women directorship by industry also is biased. I'm sorry, this is a busy slide again, but just for you to lead you through it. So there are certain industries where there are more, which are seen as more women friendly, or they're not seen as so stereotypically male. And in those kinds of industries, there are actually more women directors. But in industries such as energy, power, chemical industries, there are lesser women, but women are more found in trading, media, entertainment, and services. Now, why that has happened, it is anybody's guess. But this is the data. This is what we find, that there are fewer women who get represented, or fewer women in industries which are typically seen as male industries. And also the representation of non-independent women directors in some of the typical male stereotyped industries is even lower, because maybe they, I don't know, even the families don't want, you know, their women to be part of these boards, and I don't know, maybe that is the reason. Okay. Age, are women and men the same age? There should be no reason why they shouldn't be, but in fact, women are younger, yeah, and younger significantly, 14% lower than the men in terms of their age. So they're younger women who join the board, and in fact, what is interesting is that with the mandate getting introduced, in fact, younger men are also becoming are getting on boards. Earlier, the average age of the board was much higher than before the mandate. So as women have come in, there has been an age shift even for the men. So here is what I was saying, that even women as directors, men as directors are getting to be younger with the coming of women. So younger men have a better chance of coming. But what is really interesting and possibly disturbing is that there are women who are really young. Yeah, there are 5 women directors who are independent directors, and they are less than 30 years of age. We went and looked up their qualifications. Some of them are BA, BLLB, some of them are BCom, and so on and so forth. And they are independent directors, so they're not even part of the family. They're not being trained to take over the business, while the men who are so young are always non-independent directors, and they're part of the family. But women not necessarily. Actually, 4 of them are part of the family, 5 are not. And if you see, 15% of the women directors are less than 40 years of age. Here is another disturbing way in which possibly the mandate is being skirted. You're putting in women who are really young, who will not question you, who are just there to meet the mandate, and they're just there to possibly fill, fill a tick box. And unfortunately, that's something that we also find. So hope it's also obvious that the search for and selection of women directors is possibly from a shallow pool. So that's something that we possibly need to keep in mind. Again, I don't have the graph here, but it's in the report that among the older as well, there are fewer older women on the board as compared to few older men on board. So there are more older men on boards. Women are not less qualified. In fact, they are actually fairly qualified. There is only 1% of the women who are matriculates, who are secondary or matriculate educated. Rest, everybody is a bachelor's, master's, doctoral. A significant 10% are actually doctorates. And also, what is interesting is that again, I don't have that data here. I don't have the graph here, but I'm showing this, that women with science and technical degrees don't occupy board positions. Women with finance degrees, MBA, BCom, arts have a greater chance of being on boards than women with science and technical degrees, which is in fact a very sad thing as well, right? So again, something around that is interesting. Are women more stretched than men? Again, that was one of the worries people had about the mandate, that the same women would get appointed. We didn't find that to be true. In fact, we found that just 3% independent women directors are just 3% more stretched than independent men directors. Largely, women as board directors are not more stretched than men directors on NSE listed firms. If at all there is a little bit of a stretch, that is at the NSE 50 level. So at the very top, the top 50 companies, there is an evidence of golden skirts, golden saris So it's the same women who are getting represented on several boards, but that's only at the very top and not across all the organizations. So getting on the board is one part of the story, but what kind of experience is offered to them? Are they chairpersons of committees? What kind of committees they become part of, and so on and so forth. And again, no prizes for guessing. In fact, audit committees, there are only 6% women who are chairs, 93% men who are chairs of audit committees. The number gets a little better when we come to stakeholder committees. The number is not so great when we come to NRC, CSR 11%, and risk management only 2.2%. And of course, these are the top 4 committees: audit, NRC, which is the nomination and remuneration committee, CSR committee, and grievance committee. Again, the percentage of women who are members is less compared. If you look, the orange line is the total number of women directors, and the percentage of women who are directors is the blue line, is the blue. And again, so the women are there, but they are not being offered to be chairpersons of the important committees, and if at all, they're just members of some of these committees. Surprisingly, again, the compensation that women get is much lower than the compensation that men get. We've removed 1 or 2 of the outliers. There is the Sun TV, the Maran family, where this woman earns 100 crores just by sitting on boards. So we removed a couple of such numbers. Once you remove the outliers, because there are such outliers even among the male directors, this is what we get. Actually, women earn 58% less when they sit on boards as directors, and 61% lesser commissions and share units for women as directors compared to men as directors. And just to say that this is only done on the top 500 companies. This data was only looked at from 500 companies. It is really painstaking to go into everybody's compensation and breakup of compensation. So we did this only for the top 500 companies, and this is what we found for this. Another very disturbing trend was that, in fact, women stayed on boards less longer than the men stayed on board. So women are more likely to quit once they join the board before their tenure gets over, and they are less likely to get on to the second tenure. And the reasons that women give for not being on boards are even much more revealing and interesting. In fact, the most common reasons, the 2 most top reasons that women give for leaving are due to preoccupation and personal reasons. You can't say their work-life balance is the issue, or they have too much work to do. There is something that is happening in the boards that women leave earlier, and they're giving really Mickey Mouse reasons for it, but there is something to be looked at as to why that is happening. Here is something that for us to look at. Also, we asked women whether they felt that their expectations were being met and what would help them to meet their expectations. This was based on this primary data that we looked at, and we had asked questions around personal board-related dynamics and regulatory focus. So maybe they would find the prior experience, formal skills, personal networks to be something that enabled them to perform well, values given to diverse. So this is the inclusive climate within the board which would help them perform well, and also whether the regulatory dynamics actually have been looked at. And we found that women did say that their own experience and education definitely helped them to perform well in boards, and also whether their voice was heard, their diverse voice was heard. As long as they said everything what everybody else on the board said, obviously they are heard, but are they heard when they have a different point of view? And if they felt that they were heard and respected for it, they felt it was an enabler, and if they didn't, then they did not think that it was so nice to be there. Also, many of them did say that the statutory requirements by the regulators and governing bodies are onerous, but sometimes they're also enablers because they know that there is that the company is forced to do the right thing because there is a statutory requirement around some of this. So, of course, people said that culture of the board was important and the company culture was important, while they did not think that any of the mentoring or the skill building programs was an enabler for them to actually do their work. We also found that the expectations that women had were around acceleration of learning and growth and broadening perspectives, and these were the expectations that were definitely met for women. The unmet expectations included gaining recognition, increasing visibility, and remuneration. They did not think that they had met some of these expectations. And of course, the challenges that they faced while being on boards included the fact that the regulation was very onerous and sometimes they did not have enough teeth to be able to get the company to do the right thing. And sometimes they did not, a lot of women did speak about how they did not have the oversight of what the company was doing, and the time that they got to spend on the board was too limited, and therefore to be expected to know exactly what the company was doing and whether it was doing right was sometimes very difficult for them. So my summary includes that there is an inorganic growth of women on boards. And that's the only way possibly how women grow, how we will have better representation. There is some evidence of skirting the mandate, and I have spoken about it as I presented. And there is definitely an inequality with men's representation, and there are biases at the industry level. My suggestions, if I were, and I'm hoping to also take it to the industry bodies, is that there is in fact no dearth of qualified women, and we need a bolder mandate, right? If mandate is what gets more women on the board, then we need a bolder mandate. 1 is too Mickey Mouse. We need at least a mandate of 2 to 3 women, because that would help to increase their voice and their ability to be on that. A lone board member is often invisible or hypervisible. A critical number is needed for women to be able to contribute fully. And there has to be some kind of a check and balance need to be put around age and experience, right? This whole thing of having this out of college young woman on a board as an independent director does not bode well for corporate governance, it doesn't bode well for the company, and it doesn't bode well for the women themselves, right? So that's important. And I think at this point of time, boards kind of go on, having appointed a woman, they go on as on business as usual. I think boards need to be made a little more mindful of inclusion processes and to help in the group dynamics. And I think one of the other things, again, this is also a little bit from the personal experience of being on boards, is that there are times when you are really stuck because there is something happening in the board for which you have no other sounding board. You can't talk about it to people you know because it is confidential. You don't have a thick network on which you can depend on, and therefore I think it's so important that the regulator actually sets up some kind of an ombudsperson or a whisperer or some place where actually you could go and thrash out and think aloud of the situations, having with the confidentiality and professional norms in mind. So I think that's another thing that you need as you bring in less of the inner circle into the boards. And with that, maybe I'll say thank you. I'm sorry if I've rushed through it or I've inundated you with data, but I'm happy to answer any questions at this point of time. Thank you. Okay, so Weber, maybe should I just ask, should I look at some of the chat and answer?
Yeah, that would be good. That would be good.
Yeah, right. Okay, Preeti, you've asked for sources of data on each slide. In the report, I have sources of data for each slide, and you are, I'm happy to share with you the entire report for you to be able to look at it. Yeah. Thank you. All right, can you please explain what you mean? By tenure in this case, Deepali, what I mean is that how long women stay on the board. Like typically, there is a fixed tenure for women. For everyone, for a board member. And in fact, SEBI now has a rule and regulation that you can't do more than 2 terms until and unless there is a very special requirement. So earlier you could be, if you went on a board, you could be on a board for as long as you died and until you died, or you couldn't really get it to a board meeting. But now that has been taken care of. But even though you can stay on a board for 3 years as per the tenure, there are women who are leaving earlier. I don't know if it's 3 or 4 years. I'm sorry. We can look that up. Whether it's 3 or 4 years, but that's really what it means. Okay. Yeah, and I will send you my email ID. I'm happy to share the presentation and the report, because the report is more exhaustive and it has everything.
Also, everyone, the webinar will probably be uploaded on YouTube. So if you want, you can, you can just look at the slides, or you can just look at the discussion again over there.
Any other questions? You can unmute and ask the question if you'd like to. Maybe that's a way to do it.
So I have a question, Neerav, here.
Yes,
so when you talked about compensation, I was wondering that one major reason might be that most of the women directors are independent, and then they would receive only the sitting fees. Absolutely. And that might be driving that.
Yes. So that is one, and I think also because they're on fewer committees, their compensation also becomes lesser, because they get lesser for that many sitting fees as well. So there is because they're not being treated equally, therefore there is a certain level of difference.
And one more point, your suggestion on that, maybe the regulators can think of coming out with a mandate that, women with experience should only be allowed to serve as directors. I think that should equally apply to men also.
I totally agree with you. Especially if you're an independent director. There is a reason why it's an independent director. So the age and experience qualification should be there for both men and women. Definitely.
Yeah.
Definitely.
Thank you, and I enjoyed your session. Thank you.
Thank you. Thank you. Shalini, do you have a question?
Hello, ma'am.
Yes.
Hello, Neharika, ma'am. That was
Yes.
really a wonderful and very informative session. I really enjoyed a lot.
Thank you.
Thanks a lot for sharing your knowledge with us. I would like to discuss one point with you.
Yes.
In one research paper, HBR research paper, I came to know to the point that only talent is not enough as far as women board directors are concerned. When it comes to women in boardrooms, they do have to keep on proving continuously that they are worth for the position. So I would like to discuss this with you.
Right. So I would say that is something that is true for pretty much, any position that a minority is part of, whether it is a man or a woman. If you're a minority, that would be true. But for women, it is truer. But my research, I did not capture whether as a woman you had to do something to prove yourself more, right? So I did not capture that. While this might be an experience that you hear, but my data doesn't, I don't have data on it. And because we're doing a research conversation, I don't want to be making a judgment without having.
Okay. Thank you so much, ma'am, for giving such a wonderful knowledge and deep insight about the subject. Thanks again.
Thank you. Right.
Aruna's got a question. Hi, Aruna.
Okay. Hi, Aruna.
Hi. So I was curious about those very little number of firms who had more than one woman director. So if one is a response to the mandate, maybe hiring the second and third is actually a recognition of their talent or something like that, which means one would expect the way they reacted to the mandate in a very different way, possibly. So did they actually add the second and third member before or after the mandate?
Yeah, so we looked at some of that data. Not so much, we couldn't find a pattern there, Aruna. We couldn't really see that, but it was interesting. I think it was one of the TTK companies or whatever. They had a woman who was on their board, an independent woman, for I think 40 years. Yeah, and when the mandate got put in, so for 40 years she was just part of this as an independent director of a board. And then when the mandate got put in, they basically took her and put her on some of their 2 or 3 other companies. So they didn't add another woman to their board, but they used this talent, this woman who I'm sure they had groomed, who had gotten groomed over these many years as a woman director, and they just went and put her on part of their related boards, right? So some of their own boards that they put in. So that pattern we did find. We found some such nuggets, but we should look at what happened to who had more than one woman. What happened to them? I don't know the data. Maybe I should look at.
One more question.
Yeah.
Can I ask?
Yes, please. Yes.
So about the exit, right? So regarding
Right.
the very short tenure,
Right.
is that in some sense also related to the hiring of very young women just to tick off the box of mandate? So you hire, you're not mentoring, and they are the ones who are exiting. So are the young ones exiting at a much faster rate as opposed to maybe senior people who are also recruited with the same objective of ticking the box? So some sense of...
Yeah. So again, because we did not have data for all the 1900 companies on tenure, and we only looked at top 500 companies when we did that. So we did not find again an age pattern there. That the younger women were leaving earlier. We didn't find that, and that is why it was surprising, because you are pretty much in the in late 50s or early 50s, and you're still quitting because of personal reasons, right? So it seems like a politically correct answer rather than the real answer for leaving. And this is just from the MCA website, where they have to your reason for leaving the board is made public. And so it might be interesting to actually go and speak to some of these 25% women as to what was the real reason that they left. It might be a way to take this research forward in that sense. But I don't have that data. Whether they will speak to us or not is a different story, but it would be a good idea to figure out what was the real reason why they left. But I think there is a certain amount of you select somebody who is really not interested or not wanting to do it, but you have them put up for a mandate, and then whenever it seems convenient, they just leave the board, and then maybe somebody else is brought in. Maybe that also happens, but really I don't have data to show that.
Okay, thank you.
Thank you. But good questions for us to think about.
Yeah, I think somebody was asking a question. Did I hear?
Oh.
No, I guess not. All right. I think if there are no more questions, we can conclude. Yeah, perfect timing. So we can conclude the research seminar. Thank you everyone for joining us tonight, and thank you Neharika for your insights. It was wonderful.
Thank you.